you haven't heard us talk about these 2 or 3 time leverage ETFs because leverage works on the upside, but also works on the downside, right?
Absolutely. And you really have to understand some of these products. And, there's a lot of components, a lot of pieces. It ends up being like investing jambalaya where you're not quite sure what's in there. And, really, if you have questions or if you have interest in that area, please give us a call. Let's talk about it and let's see if these things make sense. And I would say for most people, most investors, most retirees, there's probably not a great use case. But if you have interest, certainly you should call us.
And sometimes, we overcomplicate things. Here's a year where it's simple things like dividend growth funds.
Yeah.
You look at SCHD, which is a Schwab dividend growth fund that we use, or Vanguard dividend growth things. They're doing great. I mentioned the large cap value index up 20%, and then we overcomplicate it as an industry, and people want to go into, these levered ETFs when they have solid dividend funds. So I'm thankful that we've kept that balance between growth and value, because the people that are really investors that are having a really difficult year are people that are overweighted in the growth sector. And we're seeing people, 8 months into it that are down for the year, but they've invested in the hot sector that has contracted over the last 6 weeks. So it's unfortunate. So it's still a good time to have a balanced portfolio, growth and value. Because now I think if you look at some of Morningstar does a great thing on their website. And right now they're showing that now value is overvalued compared to growth. So now and then I'm hearing from other investors saying, hey, maybe I should do more value. That's already up 20%. So maybe it's a good time for growth. The idea is to kind of keep things balanced.
Yeah, it's just one of those reminders, right? That having a diversified portfolio and not trying to constantly chase the hot dot, right? You might give up a little upside in a scenario like that, but you'll be happy in times of volatility and you'll have a reasonable rate of return. And I think we all have to constantly fight that urge of trying to figure out what's the next greatest, best thing out there, and sometimes just stick with what's tried and true and what works through multiple environments.
Yeah, it's always fear and greed, right? And these hot funds come up, and then people get greedy and they go in late after it's already up a lot.